I would also add there's this question of whether we'll see governments around the world starting to add Bitcoin to their own balance sheets. I would say that that possibility is not priced into the market at all. If that becomes a reality, I think you're talking about Bitcoin being many hundreds of thousands of dollars. There's just not enough Bitcoin in the world to support, to facilitate that kind of demand without prices going substantially higher. So I think this is a real sea change. I think investors have underestimated it. I think it's going to have a long tail effect. It'll extend the bull market substantially in 2025 and potentially beyond. I'm hugely excited.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Matt Hougan reveals why the next Bitcoin bull run kicks off at $150,000 and what it means for the market. Let's catch him to uncover these exciting insights.
I think the important thing to note, you said broke every record. It shattered them. As you mentioned, it's not even close. It's orders of magnitude bigger. You take the best performing financial asset of all time, which is Bitcoin, and you take a 10-year delay for demand to build up and a huge audience of people who don't feel comfortable buying Bitcoin any other way, and you put them together, and it's just a spectacular result. Of course, there were other elements, right? There was what was going on with MicroStrategy pushing prices higher. There was what was going on with the U.S. election pushing prices higher. But there was just huge pent-up demand. The thing I always come back to is the vast majority of investors still have zero exposure to Bitcoin. That has to change, right? Most investors are going to end up owning Bitcoin. The ETF was the first release valve to see that happen, and that led to this spectacular result. It's starting to change. It's starting to change in the direction of more balanced. If you look at most ETFs globally, they vary by ETF, but it's fairly typical to have about half from retail and half from institutional. And that's the direction of travel we're seeing on these Bitcoin ETFs. You're seeing the share of institutional demand tick up a little bit. We're still in the high 70s on retail, but I think that will really start to change when we get the Q4 numbers. You get those reporting about 6 weeks in arrears. So we'll get the Q4 numbers in mid-February. I think you'll start to see it more like 75-25. And then over the course of the year, that's going to balance out more towards 50-50. The important thing there is that what that tells you is we've set these records, and the real institutional demand has only just started to trickle in. So it tells you that this inflow has a long way to go. I expect the $40 billion we see to be eclipsed significantly in 2025. I expect more inflows in 2025 than 2024. And it's because those institutions are really going to start to buy. That's exactly right. These demand curves are exponential, which means even in the early phases when they're building, you barely notice because it's going from a few million to like maybe 5 or 6 million. You start to see it, and then it escalates like that. And that's what we're going to see on Ethereum. There are a couple reasons for that. One is that, as you know, whenever an investor comes into crypto through Bitcoin, it sort of marinates for a while, and then they start to learn more about crypto. And then 6 to 12 months later, they buy Ethereum and other altcoins. That's happened for 15 years in crypto. And of course, it's going to happen with ETFs. So you get this echo boom. But I'm also just organically excited about where Ethereum is and where it's going in 2025. I think the setup is extremely strong to benefit from agentic AI, to benefit from stablecoin demand, benefit from tokenization. All of those play directly into Ethereum, more so than any other programmable blockchain. So I think there's both this sort of natural increase in demand for the ETF, and then these huge catalysts from what I expect to happen in 2025. So I'm really bullish on ETH inflows in 2025.
Bitcoin plunged below $96,000 on January 8, triggering fresh market concerns as a sharp sell-off placed its price at a pivotal level. The cryptocurrency has seen over $5,000 wiped from its value in a single day, driven by fresh U.S. macroeconomic data that unsettled risk asset markets. This drop has intensified fears of a deeper correction, with analysts eyeing a potential retest of $88,000. Data from CryptoCoin highlights surging selling pressure on Binance, with the hourly net taker volume reaching a 2025 peak of $325 million during the release of unfavorable ISM-P&I and JOLT's job openings data. The result has been a cascading effect on Bitcoin, with $95,000 emerging as a critical short-term support level. Skew, a prominent trader, noted that while bid liquidity has increased around $92,000, $88,000, sustaining $95,000 is essential for a near-term recovery. Despite the ominous outlook, some market participants remain optimistic. Analyst Johnny suggests a drop to $88,000 is highly probable in the coming weeks, particularly as political events, like the inauguration of U.S. President-elect Donald Trump, could influence market sentiment. However, traders like Josh Rager maintain that Bitcoin could rebound by the weekend, given historical patterns of rapid recovery within similar trading ranges. Kyung Ju, CEO of CryptoQuant, adds a positive perspective by pointing to the increasing demand for Bitcoin as a sign of underlying market strength. The apparent demand indicator, which measures Bitcoin held long-term against newly mined coins, suggests robust investor interest. Additionally, shrinking sell-side pressure from exchanges could further limit downside risks and set the stage for renewed bullish momentum. Whether Bitcoin's slide to $88,000 becomes a reality or averted by resilient demand remains a key question for investors.
Long term, that's where most of the demand is going to be. If you look in the traditional sort of equity space, people don't buy one stock. They tend to buy an index fund. That's going to be true in crypto as well. There have been a couple products. Bitwise has an application, which I can't speak to specifically, but there have been a couple filings to launch these index-based ETFs. You got to remember, most traditional investors don't live in this world like I do. They think about crypto, a few minutes a week. They just want exposure. And for these people, an index-based product that'll be mostly Bitcoin, some Ethereum, and then some exposure to Solana and other altcoins will be the perfect product for them. And I think they'll attract tens of billions of dollars of inflows over time. One of the biggest trends last year was corporations buying Bitcoin. MicroStrategy gets all the press, but there are dozens of companies beyond MicroStrategy that are moving on to this sort of Bitcoin standard of keeping their corporate treasury in Bitcoin, both public companies and then, of course, private companies as well, like Bitwise. But we, think there is demand to invest in these companies that recognize that holding traditional cash on a balance sheet is a losing proposition, right? Fiat currency loses value over time. So why do America's public companies and the world's public companies hold trillions of dollars in an asset that is depreciating over time? The smarter companies are moving on to this Bitcoin standard. So without talking about, again, the specific filing, which we made and you can see at the SEC site, we think there is substantial demand to invest in these Bitcoin standard style companies. And we think it's a real differentiating factor, right? I think these are companies that get it. They see what's happened with the money printing. They see what's happening with fiat currencies worldwide. They're opting out of it onto a Bitcoin-based treasury strategy. And we think, though, those kind of companies will be rewarded in the future.
Ethereum could soar to $12,000 this year, a staggering 257% increase from its current price, driven by the anticipated Petra upgrade. A pro-crypto U.S. president and growing adoption of exchange-traded funds, ETF, according to Derive's head of research, Dr. Sean Dawson. He attributes this potential rally to a combination of technological and regulatory developments, including the Trump administration fostering a more crypto-friendly environment. The Petra upgrade, slated for release in Q1 2025, promises to enhance Ethereum's efficiency and scalability, which could catalyze broader adoption of real-world assets and bolster utility in emerging fields like decentralized physical infrastructure networks, DPIN, and AI applications. Layer 2 solutions, such as Base, are already gaining traction in these areas, indicating Ethereum's growing dominance. Dawson also highlights strong bullish sentiment in the options market, with 250% more call options than puts on platforms like Derive. However, he cautions that Ethereum's momentum depends on sustained institutional interest and competition from rival blockchains. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.